What's up, you dirtbags and best friends and internet people of the world, investors, stressors, and everybody in between? Welcome to a new show hosted by yours truly called Show Me and Follow the Money. It's a show where we're going to strip away the Wall Street glitter and show you what institutions are really doing with their trillions. And spoiler alert, it's often messier than your uncle's crypto portfolio, or when your when a dad and son date the same woman. Kind of the same thing. Today, Apple got the corporate version of "It's Not You, It's Us" breakup. Pfizer gets surprise love from the street. And VTV, that boring old value ETF, it just became the boomer prom queen. So let's go ahead and dig into this. So let's talk about institutional flows first. You know, the kind that can make or break the markets. Bank of America was out here straight up balling today, son. Straight balling. If we look at Bank of America, they added 1.10 trillion into their total portfolio with now a total value of 1.19 trillion. So, hey, hats off to them. Let's go ahead and look at what their stock holdings are. Apple is the majority of their portfolio percentage right now, 2.76%. And their change was 118 million shares added today. So it looks like a lot of these came in 3 months ago, it looks like. But let's see what the report date for today was. Oh, I guess not. Oh, maybe it's their options holding. Let's go ahead and look at this. We're going to figure this out together like a family. Oh, this is just their reportings. Okay. So this is kind of their breakdown for the most part. Again, they added a ton in assets, but they also sold 1.76 billion off on assets, leaving their fund value at 474.26 billion. Did someone fat finger a sell order though? BlackRock, or not BlackRock, did they just try to rebalance, or was this a straight up rage quit? Either way, the math is not mathing with these guys. Norges Bank is another one on our radar. We saw 767.29 billion inflow with zero sells. Either their analysts are Zen masters and are not stressing this correction that the market's going through, or their compliance team is currently on vacation and they just missed some very big sell orders they had to put through, or an intern fell asleep. BlackRock, our favorite, bought 177 billion and sold 50 billion with nearly 5 trillion under management. That's like tipping your barista with a 20 and calling it philanthropy. You're just being a dick at that point. Raymond James went hard with 273 billion in buys and zero sells. That's not a strategy. That's a middle-aged man in Vegas yelling, "Hit me," at a blackjack table with 19 showing. Just insane, degenerate behavior here. VTV, which is our grandpa ETF down here, just saw $300 billion in inflows today. Yep. Right, or 275 billion. We're splitting hairs at this point. But because the world is melting and people want to hide in dividend paying sleep aids, it looks like that they will be popping and making things shake for them for a little bit. So what's in VTV exactly, you're probably asking, because let's be honest, most people don't know about it. It's financials, energy, and industrials. It's the financial equivalent of eating oatmeal for dinner. Granted, I did that last night. It was amazing, by the way. The top sector here is financials, which makes up about 40% plus, healthcare and energy. And the vanishing acts here are consumer cyclicals, communication services, real estate. Apparently, fun is canceled with these guys. It's kind of like going over to your grandparents' house. It's fun to see them, but, there's only so much you can do before you got to go. This might explain the explosion of buys in Oxy. If we go ahead and look up here, Oxy, we saw $17.57 billion in buys, or 4.94 million shares added. We also saw some big buys into LEN. We had 248,000 shares added, or $1.57 billion in value added as well. We saw Canadian Pacific also get some action. Shout out to our 51st state. with 6.8 million shares, or $5.67 billion in market value for those shares at the time. And yeah, Pfizer's even back on the board after they got their teeth kicked in. Like nobody wanted them, like they were the ugly girl at prom. They are unfortunately back and are not going anywhere, apparently. Now, Apple just got the worst text ever, however, when we look at our top 10 most owned that were just sold off. We're reducing exposure, down 14 million shares, or $86 billion in total value across major funds. Most owned stock still, but Love, no, it's on thin ice. It's kind of like Love is Blind at this point. Microsoft held its ground. There were slight trims, but still 28 billion plus in Love. But the biggest shock, Pfizer. Yes, the stock that spent 2 years in purgatory just got picked up by 10 institutions, adding $642 million in value. Yep, that's right up here, boys. Crazy, right? Crazy to think. Do they know something? New drug incoming, another global panic, or are they just nostalgic for those 2021 vibes again? Then we got big flows into. We're seeing some big flows head into PDD, our Chinese e-com play. It's up 798 million. Someone's betting on Shein's cousin. Oxy is a big energy bet here with being up 17 billion. Is this Buffett? It might be, but again, that's all speculation. CP railroads, because apparently the 1800s are hot again. I mean, we're apparently hanging out in the 1930s, so why not bring the 1800s into the mix as well? If this chart, by the way, for the value rotation does not scream panic rotation, I don't know what does. Tech was the crown jewel at one point. Like, that was all anyone cared about. Now, it's just a trust fund. Meanwhile, financials and consumer defensive are climbing like your dad's cholesterol. Tech stocks dropped by 20% across the board. Consumer defensives, think groceries, pharma, etc., also surged. Real estate and utilities are barely clinging on for dear life. And the translation here is institutions are preparing for a market where growth slows, rates stay high, and boomers dominate earnings season. So what have we learned from this chart? And let me know how often I should do these, by the way. I'm thinking maybe it's a once a week thing just because I don't know how much is going to change here. But I'll also be keeping tabs on things, so I might make shorter versions of it, Anyways, we'll play it by ear. Let me know in the comments. But anyways, institutions are rotating hard into safety, as we can see. Pfizer's getting calls again. Apple's still the popular kid, but starting to get the side eye. And VTV just turned into the $300 billion nursing home ETF of choice for all of our old people out there. But go ahead and smash that like button if you learned something or laughed. Subscribe to Follow the Money for more, not Follow the Money. Subscribe to Trading Gains. The series is called Follow the Money, Mother Trucka. And next week, we're going to dive into options flow and why some fund manager just dropped 18 million betting Tesla going to zero. Anyways, I will see you guys in hopefully the next episode if you liked this. Again, keep me posted. Let me know what you thought. Leave your thoughts below. I'll see you in the next one. Subscribe, like, share, comment. Love you all. Mwah. Bye.